Following is an update and technical analysis on the U.S. equity markets, starting off with the S&P 500 futures based upon the daily interval, in which I will additionally cover the U.S. Tech 100 space, giving some extra clues onto the next directional move for the markets. And we had some big headlines rock the U.S. equity space with surging GDP, economic growth, low inflation, high new home sales despite steady home prices, and figuring of the GDP numbers, and underneath the hood is a surge in RV mobile home purchases. We had a positive labor market data, even though jobless claims rose a bit, but are still near multi-decade lows, influenced the day for traders on a Wall Street fade towards the end of the session, where they didn't pay much attention to less favorable data like weak national activity from the Chicago Fed, weak manufacturing data from the Kansas City Fed, and unimpressive headline durable good orders, and deep diving straight into the technical sphere of the S&P 500 off the daily interval. And it is a rarity for a lot of trade ideas and or position sizes to go in and trying to trade and predict the next underlying trend in a security that is so heavily diversified upon all 11 sectors of the stock market in the top 500 companies of the world here. And we are trading amongst a concealed primary reactionary uptrend line, call it a multi-year major reactionary high and low key inflection point, and it has been cuts through a ton of series of wicks. A lot of retail traders and or investors may not see it. Algorithms, computers, big institutions will catch on to this monumental key inflection point that I have been hyping up for quite some time on now. And here we are, retagging and readjusting, trading right amongst it. We had two reactionary high rejections, and here we are. And I believe this creates the most valuable risk reward short trade setup to the downside, setting some stops up above if we go on to break out amongst this key level to scale on a scaling out process. Whereas the downside, great reward to the downside, reacting upon the 4820 major reactionary high off the 2021 previous all-time high there, and that could have some sort of miniature reaction, if not around the 4795 range, with two major reactionary lows and some reaction amongst 2021, call it a multi-year price support level. If and when we take that level out, then we will have increased odds of potential head formation and then a potential shoulder that could be in the beginning stages of a head and shoulder classic looking top, with the 50-day moving average churning to the upside in confluence of the 471980 price support. And that would be an additional neckline if and when some of these key levels are reflected upon and or rechallenged once again. This again offers the greatest risk reward short trade setup to the downside for any consolidation phase, and long traders and or bull traders must defend heavily to continue the uptrend and an explosive historic bull run going into 2024. Short sellers, they want to see a solid red infused daily interval sell signal break down below its 50-day moving average, and what I would consider a potential neckline to the head and shoulder top, a rechallenging of this major additional concealed hidden reactionary downtrend line, which will come in confluence of the 100-day moving average as well. So some key pivotal transitioning points, and I believe we are there. With one of the biggest headlines to rock the space was with the Fed ultimately on the 11th of March freezing and seizing up the BTFP borrowing facility for the regional banks, and I believe that could be one of the biggest catalysts for a much larger double-digit correction to follow suit. Taking out to the U.S. Tech 100 space, and it is the biggest, bar none, the biggest sector to the entire S&P 500 and the NASDAQ, and we are what I have a now well-defined primary reactionary uptrend line with major reactionary lows across that entire sphere here, with the potential divergent high and or negative divergences that could be the beginning stages in construction amongst all four key technical momentum indicators. You have the stochastics on a confirmed bearish crossover if and when some damage continues to be poured into these momentum indicators, with the confirmed crossover here in the moving average convergence on a rechallenging of its zero line threshold. That would be the ultimate difference and our reflection amongst that primary uptrend line, which would need to be defended once again, additionally like the neckline to the S&P 500, to continue the uptrend of the 2024. Short sellers, bear traders want to see a solid daily infused candle close, big breakdown sell signal, a potential rechallenging and or backtest on a much larger move to rechallenge the 16,447 price support. Make no mistake about it, I will patiently wait for a breakdown sell signal off the big tech space here, but I will continue to add to the S&P 500 in what I would call a slightly aggressive risk reward short trade setup, but an objective short trade in the risk reward arena. Do not underestimate how quickly things can change in either direction, especially on utilizing the masses as a contrarian indicator on an all-out rug pull event.